to finish the week have finished on a very soft note, suggesting that the dollar yen is going to weaken further. So for now, we have our key level of resistance, 91.43, 91.54, and 91.10. So with a close of 90.86, essentially at this time, we need a sustained break of the 91.43 area to take the pressure off the potential downside here. So very important to watch this Sunday night, Monday, Tuesday trading to see if the market can get above the back above the 91.43 and hold above this area. If it can, again, the pressure will be off the downside and the uptrend in dollar yen should continue. But again, my optimism remains guarded at this time because of what I've outlined here. Now, going into our next pair, we're looking at the Euro British Pound. I think that's worth a look here. We have a fresh crossover that's taken place from Vantage Point, the 3-day and the 8-day crossing over the 18-day predicted moving average, bringing our major resistance level now 89.47, 89.27, 88.85. Shorts highly recommended off this 88.85 on Sunday, Monday. However, I'm not even convinced it's going to move that high. We may see this thing stall out around the 88.60, 88.70, and we're likely to see a break of this 88 level very soon. Now I want to point out here so everyone can see this. We have a number of candlesticks that have come down here off this 88.50. However, this was breached today. We can see that the low was 88.10. Hopefully everybody can see that okay. Now, again, with today's low, that marks the lowest period in the last several months. Very, very bearish close here. 88.46 is, again, very bearish, and this suggests that Euro British Pound is getting ready to move much, much lower, probably down into the lower 87 area. But again, we do have a lot of support in this area, in this 88.50. So if Euro British Pound can get back up out of this area and get free of this area and get over this 89 level and hold above the 89.50 level, then the pressure would then be off the downside, and we may see a move higher. But just so everybody can see this, I'm going to back this out a little bit because it's always useful to do so we can see the last 6 months. And by looking at this setup here, obviously we can see that every time it moves higher, it's a lower high and a lower low. So on a wider time frame, we can see this thing capping out here in this 94 area. Each time it's come down, it's retraced, it's touched off in this 88.50 area, only to turn around and move higher. But when it's moving higher this time, you can see 90.50. Now again, we're moving lower. Each one of these candlesticks, the last time it moved up, this week actually we saw significant resistance in the 90.27 area, only for it to turn around. We can see here we've got about 4 to 5 candlesticks in this 90.27 area. Market couldn't get through that area, and subsequently we've essentially crashed all the way down to the 88 level to finish the week. So again, we'll be watching it very closely, but shorts heavily favored below 89. Now, going into the Euro US dollar here, we can see we've got another key reversal has taken place to finish the week. A number of things aiding into this. Chancellor Merkel suggesting that she's going to step down. A number of things hit the euro hard on Thursday evening, but we don't know how much truth there is to that. But what we can see here is the 3-day has crossed over the 8-day and the 18-day predicted moving average. We then had 4 straight up days here that have gone up into the 145, 60, 145, 70 area. However, we're now crossing back down. It's important to note here, the 8-day predicted moving average from Vantage Point did not cross the 18-day predicted moving average. Another strong indicator from Vantage Point that they were very reluctant to put that sell signal or that buy signal out on Euro US, warning that this thing could turn lower at any time, which it clearly did. So 144.50, that was taken out on Friday fairly easily. So again, we're back into a bearish scenario here, Euro US. We're going to be watching the 144.54 area. We're going to see if we can clear that this week. If we can hold, if this area can hold, Euro US is likely to move back into the 140, 142 area. So again, to start the week, Euro US, there's definitely a bearish bias here for the time being, but we would expect volatility. Now, looking at the New Zealand US dollar, again, very important to look at all these candlesticks. We've got this crossover from Vantage Point, very nice move. However, we can see that we've got a significant amount of resistance in this 94.50 area, or 74.50 area, excuse me. Now, again, this looks very similar to the pattern that I just showed you on Euro Great Britain. Each time that this market crosses over, it moves down, and when we get the crossover moving back higher, the high is lower than what it was the month before, the month before that. So if I back this out on a time frame so everybody can see this, we're going to look at this on a 6-month time frame just so everyone can see it. Again, a significant amount of resistance between 74 and 75, and if this market cannot get moving, if New Zealand US cannot get moving and start extending higher, then the risk of a significant sell-off is certainly evident here. So we want to be very careful starting the week, New Zealand US, but right now, again, I have somewhat of a bearish bias on that also. Now, DXY, the US dollar index, supporting that, but again, looking at the price patterns, we can see these lower highs and lower lows. So we definitely want to be cautious on New Zealand US and see how that plays out. We'll be watching the risk aversion trade very closely also, because that will affect the New Zealand dollar, New Zealand US currency pair. So it should be an interesting week. Now, Australia US, very similar pattern to New Zealand US, so I'm not going to spend a lot of time with this, other than to say that, again, we've got lower highs and lower lows. So we're in overbought territory right now, as we can see here from the predicted TSI from Vantage Point, the predicted MACD, and the predicted RSI, all in overbought territory, suggesting that Australia, New Zealand is not likely to head back towards parity, what a lot of people are suggesting, when in actual fact it could be getting ready for a fairly significant sell-off. Now, going into the US Swiss franc, obviously I've talked about this each week. It just simply is a Euro US trade in reverse. So what we've got here, we look at these candlesticks here, we've got some support down in the 101.60, 101.50 area. We don't quite have a buy signal yet rolling over, but what we do have is we've closed at 102.62. 102.64 is the 18-day predicted moving average from Vantage Point. We've got the predicted